Good morning, good afternoon, good evening, whenever you are watching the lecture. So, guys, boys and girls, in this lecture, we are going to cover two important topics. In one lecture, we will cover both the topic. Name of the topic is job costing and batch costing. First of all, we are going to cover batch costing. We'll solve two questions, two important questions of the batch costing. Then we will discuss job costing, and again we are going to solve two important questions of the job costing as well. Now, friends, everyone concentrate. Under batch costing, we'll have to calculate economic batch quantity. What we'll have to calculate, guys? Economic batch quantity. Now, how to calculate that economic batch quantity? Everyone, please concentrate. Same to same. Everything is same like a material. Sir, everyone, please concentrate here. In material, we calculated ordering cost. If you remember, guys, how to calculate that ordering cost in case of material? Number of orders multiplied by cost per order. How you have calculated number of orders? Fast. How you have calculated number of order size, sorry, annual requirement divided by order size. So suppose my annual requirement is 12,000 and my order size is 3,000. I'll place 4 order like this. So instead of ordering cost, in case of batch costing, you'll have to write their setup cost. Instead of ordering cost here, in batch costing, before every batch, you'll have to set the machine. You'll have to set the production process. So setup cost. So what is the formula for setup cost, guys? Everyone please check. Number of setups multiplied by cost per setup. What is the formula, guys? Simple hai. Number of setups multiplied by cost per setup. Everyone please concentrate. Suppose, guys, boys and girls, in a year, you are going to manufacture 12,000 units. In 1 year, you are going to manufacture 12,000 units. Demand of the final product is 12,000 units. And your batch size means in one batch, you produce, suppose, 2,000 units. So if you set one batch, continuously 2,000 units you will produce. You want to produce per annum 12,000 units. So 12,000 divided by 2,000. How many batches will be required to be set in every year? Is it 6 batches will be required? Same way, if your batch size is 500 only, once you set the machine, continuously you will manufacture 500 units. So similarly, so 12,000 divided by 500, is it 24 batches will be required? Suppose your batch size is 6,000. Once you set the machine and continuously you manufacture 6,000 units. So guys, 12,000 divided by batch size will be 6,000. Two number of batches will be required for setups. So what is your, guys, setup cost? Again check that. Setup cost is equal to number of setups multiplied by cost per setup. How we have calculated number of setups? Read, Sadi. How we can calculate number of setup? Here we will not write annual requirement. Here we will write annual demand of the final product. So whatever the demand of the final product divided by batch size, lot size, batch size. In one batch, how much quantity you manufacture? So you will get number of setups multiplied by cost per setup. In material, we calculated carrying cost. Quickly tell me how we have calculated that carrying cost. Simple formula we followed of carrying cost. Average inventory multiplied by carrying cost per unit per annum. Correct? So here also same formula is applicable. Carrying cost is equal to average inventory multiplied by carrying cost per unit per annum. In material, how we calculated average inventory, guys? Order size divided by 2. EOQ divided by 2. Here order size will be economic batch quantity. That is, Sarji, batch size divided by 2. Here carrying cost. In material, carrying cost of raw material you will consider. In batch costing, carrying cost of final product you will consider. I'll take one example, guys. Similar example. Suppose your annual requirement is 12,000. Every month you sell 1,000. So in a 12 month, you are going to sell 12,000 units. And in one setup, in a month of April only, all 12,000 units you have manufactured, sir. In one setup, entire 12,000 quantity you have manufactured. So how many setup will be required? Is it one setup will be required? But sir, demand of entire year you are producing in one batch. In a month of April only, entire demand of the year is fulfilled. Now you will not sell 12,000 in a month of April. In April you will sell 1,000. May you will sell 1,000. June you will sell 1000, July you will sell 1000. So over the every month you will sell 1000. But the problem is that in one batch directly you produce 12,000 units. So what you'll have to do, that 12,000 units you'll have to store in the warehouse in the final product. With the final product you'll have to store. So carrying cost will be required. So we are talking about this carrying cost. So carrying cost is equal to average inventory multiplied by carrying cost per unit per annum. Average inventory is very simple. Here order size divided by 2, there batch size divided by 2. What is the formula for economic order quantity? You should remember the formula of EOQ, under root of 2 into AO divided by C. A stand for annual requirement, annual purchases of raw material. O stand for ordering cost per order. C stand for carrying cost per unit per annum. Here in case of batch costing, if you want to calculate economic batch quantity, same to same formula will be applicable, under root of 2 into D. D means what? So here A means annual purchases. There D means demand of the final product. Here O means ordering cost. There S means setup cost per setup. Divided by C, carrying cost per unit per annum. There also carrying cost per unit per annum. Here carrying cost of raw material you will have to consider. There, if you can read the line, I have already highlighted, sir. If you can check that. Here carrying cost of raw material you will consider. There carrying cost of final product you will have to consider. Perfect. If you remember material topic, guys, if carrying cost is given in percentage, tell me, sir, you apply that percentage on what? Bhul gaye? Purchase price. Absolutely correct, sir. If carrying cost is given in percentage, apply that percentage on purchase price, then you will get carrying cost per unit per annum. Here, if carrying cost is given in percentage, apply that percentage on cost of production. What I told you, sir, suppose carrying cost is given 10%. In material, what we did, sir, in material, 10% was applicable on purchase price of the material. But in case of batch costing, if carrying cost is given 10%, apply that 10% on cost of production of that final product. Is it clear, guys? Next one. Sirji, Zabardast important observation we have seen, guys. Read that, this part. Everyone please read this part. Already we have done in material cost also. Sir, if my order size increases, in one order, more raw material I am purchasing, more quantity of raw material if I purchase in one order, then what will be its effect on number of order, ordering cost, average inventory and carrying cost? Yes, sir, you'll have to decide. If my order size is big, maximum quantity I purchase in one order, so Sirji, what will be its effect on number of order? Number of order will be less because I am purchasing more quantity in one order. If Sirji, number of order is less, then ordering cost will be less. But if my order size is big, then average inventory will be more, because formula for average inventory is equal to order size divided by 2. So if my order size is large number, obviously my average inventory will be more. If average inventory is more, then automatically carrying cost will be more. Next, sir, if my order size is less quantity I am purchasing at a time, then what will be its effect on number of order? Sir, you'll have to increase the number of order. Then, sirji, ordering cost will increase. But if you are purchasing less quantity at a time, so less average inventory will be there. If average inventory will be less, carrying cost will be less. Next one. Now same logic apply there. Instead of that order size, here I will take a batch size. If my batch size is big, if you can check, Saji, already we have discussed this point. If my batch size is big, so please tell me what will be its effect on number of batches. Suppose batch size is directly 12,000, only one setup will be required. Batch size is 6,000, only 2 setup will be required. Batch size is 500, 24 setup will be required. So very simple. If my batch size is big, in one setup I produce more quantity, then in that situation, sir, the number of batches will be less. If number of batches will be less, setup cost will be less. But if I am producing more quantity at a time, it is not possible to sell all of them. Suppose annual requirement is 12,000, annual demand is 12,000. I am producing 12,000 in a month of April. So I cannot sell entire 12,000 in April. I'll sell 1,000 in April, 1,000 in May, June, July, August, and so on. So remaining quantity will be in a storeroom. So my average inventory will be more, carrying cost will be more. But if my batch size is less, in one batch I produce less quantity, then what will happen, sir? Fast answer, Sirji. In one batch, in one setup, I am producing less quantity. Then, Sirji, multiple time I'll have to set the machine. So number of batches, number of setups will increase. If my number of setup increases, automatically, guys, setup cost will increase. But in one batch, if I am producing less quantity will go to the warehouse. So carrying cost will be less, average inventory will be less, carrying cost will be less. Next one, sir. Sir, if you remember, we used to prepare one table. When that table is prepared, suppose in a question it was given, guys, calculate EOQ. Then what will be your answer if vendor is allowing you 10% discount if order size is 3,000, order size is 5,000. He is allowing you discounts of 5% if order size is 2,000 and so on. So discount policy. So what we did, we compared particulars and we compared EOQ ka cost with that discount policy ka cost. Suppose two discount policy given, 10%, 5%. Then we use EOQ 10% discount, 5% discount. So we used to compare that. In that situation, we are going to consider three cost. First will be ordering cost, second will be carrying cost, and third will be purchase price. Sir, if you remember material topic, I told you, always you will have to consider purchase price if discount is there. Yes or no? So if discount is there, you'll have to compare the purchase price. Then what you calculate, Sirji? Ordering cost plus carrying cost plus purchase price total cost. If under EOQ total cost is less, follow EOQ. But if under discount policy total cost is less, then follow discount policy. Next one. Sir, same table we'll have to prepare here. Same to same table. So you will compare, suppose, guys, everyone concentrate. Suppose my economic batch quantity, EBQ, is 3,000. What do you mean by EBQ is suppose 3,000? What do you mean by EBQ? Economic batch quantity. If you produce 3,000 in one batch, overall cost of setup and overall cost of carrying will be less. Are you agree with this, sir? Best situation is EBQ. Always follow EBQ. But sir, they will give in question, calculate EBQ. But company's policy is they produce 6,000 units at a time. They produce 6,000 units at a time. Then what will happen, sir? Quickly tell me, sir. Whether if you not following EBQ, you follow any other batch size where overall cost will be less or overall cost will be more. So tell me now, very simple question I ask. You are not following economic batch quantity, sir. It is the policy of the company that batch size is 6,000, but EBQ is 3,000. You are not following economic batch quantity. Then in such a situation, if you follow any other batch size, your overall cost will be more. You are going to incur extra cost. So here also, they will ask us to calculate how much extra cost company will incur if they are not following EBQ. So you will compare economic batch quantity with your policy of the company. Here only two costs you will consider. One cost will be setup cost, another cost will be carrying cost. That's it, Sirji. It will be total cost. In material, purchase price was extra. Here there is no concept of purchase price. So only setup cost, carrying cost and total. If you remember one very important principle, at economic order quantity, whatever your ordering cost should equal to your carrying cost. Yes or no? At EOQ, ordering cost and carrying cost will match because inverse relationship between ordering cost and carrying cost. If ordering cost increases, carrying cost will decrease. If ordering cost decreases, carrying cost will increase. But at economic order quantity, so the ordering cost and carrying cost will match. Correct? Next part, Sarji, at economic batch quantity, at EBQ, your total setup cost is equal to your total carrying cost. So under EBQ, your setup cost is equal to your carrying cost. Is it clear to every one of you? Now, boys and girls, you are going to solve one question yourself. Immediately, you'll have to solve this question. Sir, this question is literally asked 3 to 4 times, same to same question. Literally 3 to 4 times, same question is asked. So I'll just take that question. This question is also there in your study material. You can refer that study material. GHI Limited manufactures stent that is used by hospitals in heart surgery. As per the estimate provided by Pharmaceutical Industry Bureau, there will be a demand of 40 million stent in the coming year. Sarji, I will underline that 40 million stent is a demand during the current year or coming year. GHI Limited is expected to have a market share of 2.5% of the total market demand. Sir, how much is the share of that our company? Our company is GHI Limited. How much is the share of our company? Sir, our company is not selling all 40 million stent. Our company is selling only 2.5% of the total market demand of the stent in a coming year. Sir, please, you'll have to tell me, you'll have to apply the common sense and please tell me how much how much stent demand of your company. Sir, 40 millions mean how much? 40 million means how much? In normal term, 40 million means 4 lakh, 40 lakhs, 4 crore. How much, sir? Sir, you should answer. 1 million means 10 lakhs. Correct hai kya? Are haya na? So, sir, 40 million means, is it 4 crore? Correct hai kya 4 crore? And our company share is only 2.5%. So, calculate, sir, 4 crore multiplied by 2.5%. Sir, the demand of your company is, sir, how much is the demand of your company? Is it 10 lakhs? 2.5% of 4 crore. Sir, correct na? So, annual demand is equal to, guys, 2.5% multiplied by 4 crore. How much you told me, guys? Is it 10 lakhs? Sir, is it correct or wrong? Correct hai na, guys? Calculate also, sir ji. Okay. Sir, check how much is the setup cost. It is given in the question. Setup cost is it 225? So I will write there setup cost as a 225. Next one, how much is the carrying cost? Always they will give some adjustment here in case of carrying cost. Sirji, how much is your carrying cost? Is it 1.5 per unit? Lekin sir, always they will give this adjustment. They will not give per annum. 1.5 per stent per month. So how much will be the carrying cost per annum? 1.5 multiplied by 12. Is it 18 rupees? Now, what is the question? Everyone please read the question. What would be the optimum run size of the stem manufacture? EBQ you will have to calculate. What is the minimum holding cost, carrying cost? Assume that company has a policy of manufacturing 4,000 stent per production run. How much extra cost the company would have to incur as compared to optimum run size? I told you, Sarji. You will have to calculate EBQ and they will give some different batch size. You will have to compare EBQ cost with a different batch size cost and you will have to tell how much extra cost company has incurred. Let's see, Sarji. First of all, let's calculate economic batch quantity. Under root of 2 into demand is 10 lakhs multiplied by setup cost is 225 divided by carrying cost is 18. Yes, sir. What is your answer? How much? Exactly 5,000, guys. The economic batch quantity is 5,000. So you are going to manufacture in a batch of 5,000 unit. Okay. So please calculate how much extra cost company will have to incur. Sir, what is your two costs? I told you, Sajid, two costs you'll have to work out. Which are the two costs? First one will be setup cost and second one will be the carrying cost. What is the formula for setup cost? Number of setups multiplied by cost per setup. How to calculate number of setups? Demand divided by batch size. Correct, sir? So I'll calculate, guys. So your demand is 10 lakhs. Correct? Divided by your batch size is 5,000. How many setups will be required? I think so 200 setups will be required. Correct? 200 multiplied by cost per setup. Saji, is it 225? Anyone got the answer? 45,000. But if you manufacture in a batch size of 4,000, so boys and girls, 10 lakhs divided by 4,000. So number of batches required will be, I think so, 250 multiplied by 225. Sarji, what will be your setup cost total? 50, 56,250. Correct? Next part, Sarji, carrying cost. What is the formula for carrying cost? Average inventory multiplied by carrying cost per unit per annum. Average inventory, how to calculate here? Order size divided by 2. Here, batch size divided by 2. Prabhu, your batch size here is 5,000 divided by Q multiplied by carrying cost per unit per annum is 18. Second column, your batch size is 4,000 divided by Q multiplied by carrying cost per unit per annum is 18. Under economic batch quantity, your ordering cost, that is setup cost, should equal to your carrying cost. Is it 45,000 only? Correct, sir? 45,000 plus 45,000, total cost comes to 90,000. Then 4,000 divided by 2. Sir, is it 36,000 in the next scenario? So 36,000 plus 56,250. Sir, what will be your answer? 92,250? If you are not following economic batch quantity, how much extra cost you will have to bear? How much extra cost you will have to incur? Please tell me, sir, extra cost you are going to incur. Is it 2250? So you are going to incur, correct? Na 2250. So extra cost company will have to incur will be 2250. Perfect, guys. Next point, sir. What tricky point can be asked in exam, sir? Tricky point can be, guys, sometimes your number of batches comes in fraction. What you did in material topic, if number of order are in fraction, we take next order, right, sir? We will not take whichever is lower, means 0.50 criteria not applicable. Say for example there 20.10 orders. So how many order you will place? You will not place 20 order. You will place how many order, guys? 21. So here also in this topic, while calculating EBQ, whatever EBQ or that any other, if number of setups comes in a fraction, you'll have to round up that to the next setup. Suppose setup comes 20.10, so you'll have to take 21 setup cost for 21 units. So this is only important point you'll have to find here. Next, guys, then very important question we will solve. Two similar questions were there. This question number 2 and I think so in your study material also question number 2 was there, January, February, March, or question number 1 it was. This is not, I'm not talking about second question. In your study material, same question is there, 3 months ka question, January, February, March question. Is it fourth number question or first question? Yes, Ajay, same question. So there it was 3 months. Here it is 6 months. So same question, but some tricky adjustment in this question. That's why we'll read this question. So everyone please read this question. Jobbing factory has undertaken, I think so this question was given for homework to you. Correct? No? I think so it is given for homework. So I don't know, sir. Let's see. Whatever. A jobbing factory has undertaken to supply 200 pieces of component per month. Sir, how many units you are selling per month? 200 component per month for ensuing 6 months. Next 6 months. So 200 multiplied by 6. Sir, the 200 multiplied by 6. Your demand is 1200 units. Next one. Every month a batch order is open against which material cost labor hours are booked at actual. Overhead are levied at a rate per labor hour. Sir, overhead rate per labor hour. What is the formula for rate? Labor hour rate. Budgeted overheads upon budgeted labor hours. Correct, sir? Next one. Selling price is contracted at 8 rupees per piece. Okay, sir. Selling price is given 8 rupees per piece. From the following data, present the cost and profit per piece of each batch order and overall position. Okay, sir. You'll have to calculate cost and profit per piece and you'll have to show overall position for 1200 pieces. Sir, What is that 1200 pieces? Already I told you, sir. 200 per month, 6 month multiplied by 200, your answer comes to 1200 pieces. So you want cost per unit, you want profit per unit, and also you want position for 1200 units. Let's read next part of the question. January to June 6 month data is given. Then batch output is given, material cost given, wages given, and labor hours are also given. Underline Saji, labor hours are given. Then other details are chargeable expenses means overheads are given and labor hours are given. Sarji, January overheads are 12,000 and labor hours are 4,800. For overhead, which rate you will have to follow? Sarji, for overhead, which rate you will have to follow? What we read the question, Sarji? Labor hour rate, sir. So what is the formula for labor hour rate? Is it total overheads divided by total labor hours? So 12,000 divided by 4,800. Sir, please check that. 2 exactly 2.5. Next month, February month, what will be the overhead rate? 10,560. G, sir, G. 10,560 divided by 4,400. Your answer comes to, is it 2.4? And so on. So we'll calculate overhead rate for January, February, March, April, May, June. Yes, sir. So what we need to calculate here? Again, please tell me quickly tell me, sir, what we need to calculate here. Sirji, we need to calculate, guys, cost per unit, profit per unit, and overall position for 1200 units. So we'll have to present like this. So first of all, we'll calculate overhead ka rate. First of all, we'll calculate overhead ka rate, labor hour rate. So total overhead upon total labor hours. In the January month, you told me to 2.5 per hour, correct? In February, please check, guys, 10,560 divided by 4,400. Sir, how much you told me? 2.4 na? 2.4 per hour. ठीक है Malik. 12,000 divided by 5,000. Is it 2.4 again? 10,580 divided by 4,600. 2.3 per hour. 13,000 divided by 5,000. Sarji, 2.6 per hour is your rate. 12,000 divided by 4,800. 2.5 per hour. So this is your overhead rate. Guys, already in a question, material cost of Jan, Feb, March, April, May, June, July given, June given. Labor cost is also given. What is the use of these labor hours? What is the use of these labor hours? To calculate overhead, yes or no? We have calculated rate 2.4, 2.5 and so on. 2.5, 2.4, 2.4, something. So rate is a labor hour rate. You'll have to multiply it by actual labor hours. So we will prepare the cost sheet for Jan, Feb, March, April, May, June. Then we can get the total cost. Then we can get the total profit. So that cost per unit and profit per unit we can calculate. So guys, very simple. Jan, Feb, March, April, May, June, July, June. So the output I have written. How much is the sales value? I think so. Selling price is 8 rupees per unit. 8 or 6? Please check the question. So the 8 rupees is your selling price multiplied by 210. Guys, your sales comes to, is it 1680? Then Sarji, is it 1600? 1760, I think so. Yes, Sarji. Then if I multiply by 180, is it 1440? Then again, guys, 1600. So 220, is it 1760? If I multiply by 1230, my answer comes to 9840. Yes, Sarji. So this is 9840. Sales I have written. Boss, material cost is directly given in the question. I have just copied that. Where material cost is given, Sarji? Here. 650, 640, 680, 630, 700 and 720. Material cost directly given. Labor cost also directly given. I just copied that. So how to calculate profit? Sale price minus material cost minus labor cost minus overhead is equal to your profit. So material labor as it is given, I have written. Sir, please tell me in a month of January, what is the overhead rate? We have calculated. Is it 2.5? Please tell me 2.5 multiplied by how many hours we have used in a month of January. Actual hours are, is it 240? Correct, sir? This is how you will calculate, sir. 2.5 multiplied by 240. Your answer comes to, is it 600, guys? In a month of February, your rate will be 2.4. 2.4 multiplied by, if you can check that, hours are 280. 672, your answer, correct? Then in a month of March, rate will be 2.4 multiplied by hours in case of March will be 280 again. Same answer, 672. Next, Sirji, in a month of April, 2.3 is your rate multiplied by, is it 270? Your answer comes to 621. In the month of May, you can check that May month, is it 2.6, guys? 2.6 multiplied by hours in case of May is 300, 780. Last month of June, guys, 320. 2.5 multiplied by 320. Guys, your answer comes to exactly 800. Anyone got the total of all of these, guys? 600 plus 672. 4145. So I'll write here 4145. Then I'll take a total cost. Direct material, direct labor, overhead is equal to your total cost. Just check that 4020, material cost 860, labor cost, overhead 4145. Your answer should match with 9025, correct? We want cost per unit. We want profit per unit, correct, guys? So total cost we have written. Sales minus total cost is equal to profit per batch. Then we calculated cost per unit and profit per unit. Read first line. Already we have written batch ka output. Batch ka output is 210, 200, 220, 180, 200, 200. So divide your total cost by this output. Divide by total profit by that output. Sir, my observation here, everyone please concentrate. My observation here, in every month, cost is different and profit per unit is different. In every month, cost is different and profit per unit is different, guys. So if I want to prepare cost sheet for 1200 units, what is that 1200 units? 6 months, 200 per month, correct, sir? Guys, cost is different, profit is different. What I will do, guys, I will take total data. Which data I will take, sir? Total data I will take. Sir, the question number 1 which we have solved, where your module question only, study material, or we have taken that question. There January, February, March information is given, correct, guys? If you can check that question, in every month, Sirji, your cost is 6 rupees. Sir, what I told you, sir? ₹10, okay. Yes, sir. Same question, sir, we have solved. But only data for 3 months is given, January, February and March, correct, guys? So same thing we have written, Sirji, material, labor, overhead, total cost, profit and sales value. Everything we have written same. If you check every month cost is 10, profit is 5, selling price is 15. Cost is 10, 5, 15, 10, 5, 15. And here every month demand is, I think so, 1000 per month. So 3 month ka demand will be 3000, correct? 1000 plus 1000 plus 1000. 3 month ka demand will be 3000. So we prepare the cost sheet of 3000 units also. So 3000 multiplied by 10 rupees is your cost, 30,000. 3000 multiplied by 5 rupees is your profit, 15,000. And selling price is 15 rupees multiplied by 3000, 45,000. Problem was not there because in every month, sir, I have already circled there, please check. Every month 1055, 1055, 1055. Cost is same, profit is same, selling price is same. But the question which we are solving, every month cost is different, every month profit is different. So if you prepare the cost sheet for 1200 units, which data you will use? Total ka data. Is it clear to every one of you? So simple, sir, you can check there. Sales value will be 8 rupees multiplied by 1200 units. So 9600 will be sales value. Cost per unit we have written onto the last column, second last line, 7.34 multiplied by 1200 units. Your cost comes to 8808. So sales minus total cost will be your profit. 792 will be your profit. Correct? So these example means these two examples in repetitive examination, either you will have to calculate that EBQ wala question, or you'll have to calculate this January, February, March and batch costing ka question. So only 2-3 questions are important in this topic. You'll have to revise that. Correct, guys? So this was your batch costing. Now we'll go to very important topic, that is the job costing. Sirji, these question number 1 and question number 2 which I am taking, compulsory you'll have to revise before examination. Compulsory, sir. These questions are there in your study material also, in your module also, and in our notes also. Both the questions are there in our notes also. Yes, guys. Everyone please concentrate here. Everybody please concentrate here. Friends, please. Job costing. Saji, job costing will be followed by those company where each job of each customer is different. No similar job will be there. Each job will be different. If we take simple example of the job costing, the company which follow job costing is two-wheeler service center. Two-wheeler service center follow job costing. Why? Because every servicing is different. Problem to every two-wheeler will be different. So for one two-wheeler, mileage will be the problem. For another two-wheeler, brake can be the problem. Another two-wheeler surgery, suppose a liner is the problem. Another two-wheeler surgery, denting, painting work can be there. Another two-wheeler surgery, oil leakage is there. So surgery, every job is different. Advertisement company also follow the job costing. Printing company also follow this job costing, because every printing job is different. So this company follows a job costing. Job costing topic is just an extension of your cost sheet. In all question of job costing, you will have to prepare the cost sheet, sir. But point to be noted, in job costing, separate cost sheet will be prepared for each job. Separate cost sheet will be prepared for each job. Now, Sirji, question number 1 we will solve, but I'll tell you background of that. What institute will do? Sirji, institute will do this question 1 repeatedly asked, Sirji. Minimum 5 to 6 attempt this question is asked. What they will do? Sirji, they will do one data of last year. Suppose they will give data of 2023, 2024. They give the data of 1 year. Everything they will give. Material they will give, labor they will give, overhead, factory overhead, administration overhead, selling overhead, profit they will give, sales they will give. Okay. So they will give the data of last year, and in the current year, suppose 2024-25, in current year, they will give information of one specific job. One of the job they will give information. Sir, what I told you, sir? They will give two information. First, last year ka full information they will give. How much was material, labor, variable overhead, fixed overhead, factory administration, selling and distribution overhead, sales and profit. Everything they will give. And then in the next paragraph, they will give information of one of the specific job in a current year. And they will ask us to prepare cost sheet for the current job. But while preparing costing of the current job, they will tell us, use the overhead rate of the last year. What they will do, Sirji? Overhead absorption rate, use overhead absorption rate of which year? 2023-24. So guys, here you have to prepare two cost sheet. First cost sheet you will prepare for 2023-24. Then second cost sheet you will prepare for the latest job. This latest job cost sheet will be prepared on the basis of last year data. So remember this question so many times, as I told you, 5 to 6, 7 times this question is repeated, and same ground they repeat the question. Last year ka data they will give, and you will have to prepare the cost sheet of one of the job. So let's read the question and understand this. Factory uses job costing system. Following data are obtained from the books of the year ended 31st March. Saji, 31st March, which year they have given? 31st March 2018. Correct, guys? 31st March 2018. As I told you, full information is given of last year. Material, yes sir. Wages, yes sir. Selling and distribution overhead. Selling and saw distribution overhead? What is saw? Selling and distribution overhead. Administration overhead. Factory overhead. And profit is given. Read first question, Prabhu. What is your first question? What you have to prepare, Sarji? Prepare job cost sheet indicating, prepare job cost sheet indicating prime cost, cost of production, cost of sales, and sales. Yes, sir. I will prepare the cost sheet. Please, you tell me the data. Same data, you'll have to just shuffle and prepare the cost sheet. Please tell me what is the format of cost sheet, sir. Start. What is the format of cost sheet? Direct material consumed. Direct material consumed. Sarji, in one question, latest examination 2022 or 23, we have that question number 15 or 16. Last question which we have solved. There, concentrate, Sarji. What they did, they have given opening stock of raw material. They have given purchases of the raw material. They have given closing stock of raw material. We know how to calculate consumption. How to calculate consumption, guys? Opening stock, add purchases minus closing stock is equal to consumption. So this adjustment can be asked, Sarji. Okay. So what is the format of cost sheet? Material consumed, direct wages, direct expenses, prime cost. Add factory overhead, gross factory cost. Then add opening stock of WIP less closing stock of WIP, net factory cost. Then add 5 items: quality control, research and development, administration overhead related with the production. Then less sale of scrap, byproduct sale, miscellaneous income, add primary packing. Then your final answer will be cost of production. Add opening stock of finished goods less closing stock of finished goods, COGS. Add administration overhead general. Add selling overhead. Add distribution overhead. Add interest on non-equity fund, latest amendment. Next, it will be your cost of sales. Then add profit is equal to sales. So let's prepare the cost sheet here, guys. You'll have to tell me the amount. Tell me, sir. How much is your direct material last year? Is it 9 lakhs, correct? How much is your direct labor of last year? Is it 7,50,000? 9 lakh plus direct expenses is not given. Direct material plus direct labor is equal to your prime cost. Sir, how much is your prime cost? Is it 16,50,000? Add factory overhead. Directly write, Sarji. How much is the factory overhead? Is it 4,50,000 is the factory overhead? So you will get cost of production. There is no opening stock of WIP, no closing stock of WIP, no opening stock of finished goods, no closing stock of finished goods. Yes, Sarji. Cost of production oblique COGS. We'll assume administration overhead or general administration overhead. So we'll add administration overhead, we'll add selling overhead, distribution overhead. Same figure. Administration overhead is 4,20,000, selling overhead is 5,25,000. So 4,20,000, 5,25,000. So you will get, yes sir, what you will get? COGS, sorry, cost of sales you will get. Profit is given directly in the last line, 6,09,000. So you will get the sales figure, 36,54,000. Correct, guys? So as I told you, sir, the first table is to prepare cost sheet of the last year. Very simple. Now read second very important question. In 2018-19 means in the next year, factory receive an order for a job, one job information, and you have to prepare cost sheet for this job. It is estimated that direct material for the new job will be 240, labor will be 150. Determine what should be the price for the job if factory intends to earn, sir, what factory intend to earn what? Same rate of profit on sales, same rate of profit on sales. So whatever last year ka profit percentage on sale, same percentage of profit will be followed here, but assuming that selling and distribution overhead gone up by 15%. So selling and distribution overhead will have to increase by 15%. Next part, Sarji, they have given overhead absorption rate. Which method is given for factory overhead? Read carefully. Factory overhead are absorbed as a percentage of, or factory overhead are absorbed as a percentage of wages. What is the formula, Sarji? Percentage of wages. Total overhead is divided by total wages multiplied by 100. Sir, I told you na, there are 6 type of rate: machine overhead, labor overhead, unit rate, percentage of material, percentage of labor, percentage of prime cost. In every formula, numerator is common, overheads, denominator will be rate which you are calculating. So in machine overhead divided by machine overhead, labor overhead divided by labor hours, unit rate divided by number of unit, percentage of material divided by material cost, percentage of labor divided by labor cost, percentage of prime cost divided by prime cost. Correct, guys? So here factory overhead are absorbed in which ratio, sir? Wages, na, sir? So formula will be factory overhead upon wages multiplied by 100. Next, other overheads are absorbed as a percentage of cost of production, sir. Apart from factory overhead, which other overhead left? Apart from factory overhead, which other overhead left? Yes, Sarji. Which overhead left? Final, Sarji, please tell me answer quickly. Is it administration overhead and selling overhead? So all other overheads are absorbed in which ratio, Sarji? As a percentage of cost of production. But where to find that rate? Read last line. Most important line. Based on cost rate prevailing in the. So, Sarji, you'll have to use the previous year cost sheet and you'll have to tell me how much will be the factory overhead rate. Chalo, read, Sarji. Factory overhead rate. Which rate they have told us, Sarji? Factory overhead rate, percentage of labor. So, read in the last year how much is the factory overhead and how much is the labor cost. Boss, your factory overhead is 4,50,000. Divided by last year ka labor cost is 7,50,000. Barobar hai, sir? So how much is your rate multiplied by 100? Is it 60% is your rate? Perfect, hai, guys. Next one, all other overhead are recovered as a percentage of cost of production. So, sir, the administration overhead and selling overhead recovered as a cost of production, but there is one adjustment in selling overhead. What is that adjustment? Current year selling overhead gone up by 15%. Correct, hai, guys? So let's check. Administration overhead ka rate, sir. Administration overhead is 4,20,000. Cost of production is 21 lakh. 4,20,000 divided by 21 lakh. Is it 20%? Then selling overhead ka rate will have to calculate, Sarji. But selling overhead in current year will increase by 15%. So, Sarji, last year selling overhead was 5,25,000 multiplied by, guys, 15 or add 15%. Your new selling overhead are 6,03,750 divided by cost of production will be 21 lakhs multiplied by 100. Guys, your answer comes to 28.75%. Perfect, guys. Why we need D? Why we need a D adjustment? Read, Sarji, what is the D adjustment? Percentage of profit to sales. Sarji, last year, Prabhu, last year, how much is your profit? Is it 6,09,000? Divided by how much is your sales? 36,54,000 multiplied by 100. Sarji, your answer comes to, is it 16.67%? Boss, why we need these? Same percentage of profit to be maintained in current year as well. We have to prepare the cost sheet of the new job. Now for that new job, read, Sarji, how much material they have given for the new job? Is it 2,40,000? So material, I have written there 2,40,000. Labor is given. Labor is already given in the question. Sir, how much is your labor cost given? Is it 1,50,000 is the labor cost? So 2,40,000 direct material, direct wages 1,50,000. Prime cost comes to 3,90,000. Correct? Factory overhead. What is the rate of the factory overhead? We have calculated. So the factory overhead is 60% of the direct wages. So here 1,50,000 multiplied by 60%. Is it 90,000? Cost of production comes to 4,80,000. Add administration overhead, add selling overhead. Administration overhead is 20% of cost of production. So 4,80,000 into 20%, 96,000. Selling overhead is 28.75% of the cost of production. So your answer comes to 1,38,000. So you will get the total cost. Sarji, एक second. Profit is 16.67% on sales, which is 1/6 of sale, equivalent to 1/5 of cost. 1/5 means 20%. So 7,40,000, 14,000 plus 20%, your sales value comes to 8,56,800. Correct, guys? So what I told you guys, I'll do your job very simple. What they will give, sir? Last year ka data they will give, and they will tell us use the last year ka data and prepare the cost sheet of one of the job in a current year. Same, Sarji. Same hai. All questions are same. Factory overhead are absorbed on a basis of wages. Administration and selling overhead are absorbed on the basis of works cost or cost of production. All questions are same, and profit percentage will be given something. So you can easily calculate cost sheet of the new job. Is it clear to every one of you? Now, guys, most important concept, most important question of this topic is question number, Sarji, 2. Must revise, must solve 2-3 times. Okay, this question is there. This question is there in your module also. This question is there in your question booklet also. So we'll read that question. Already we have marked that question important. Must revise before exam. Maximum production capacity of JK Limited is 5,20,000 units per annum. So this is your maximum capacity per annum. Details of the estimated cost of production are as follows. Direct material 15 rupees per unit. Direct wages 9 rupees per unit. But very important adjustment they told us. Sir, what is that adjustment? Read, sir. Subject to what? Maximum nahi. Minimum 2,50,000 per month. So you are going to pay worker 9 rupees per unit. But you have given some assurance to the worker. You told to the worker, bhai tu dar mat. Don't be afraid. 2,50,000 minimum we will pay. Although your production is less, we will pay 2,50,000 per month at least. Fixed overhead is given, variable overhead is given. Main adjustment of this question is the semi-variable overhead. Most important adjustment of this question is the semi-variable overhead. Semi-variable overhead are 5,60,000 per annum up to 50% of the capacity. If your capacity is from 0% to 50%, you are going to incur semi-variable expenses 5,60,000. Beyond that, beyond 50%, you'll have to pay additional 1,50,000 per annum for every 25% increase in capacity or part of it. So if your capacity is only up to 50%, semi-variable cost is 5,60,000. If your capacity increases beyond 50%, goes up to 75%, your semi-variable cost will increase by 1,50,000. If your capacity is more than 75%, goes up to 100%, again it will increase by 1,50,000. Sarji, you will have to tell me slab rate. You will have to tell me slab rate of that semi-variable overhead. Most important part of this question, slab rate of that semi-variable overhead. Yes, Sarji. First slab. Tell me, Sarji, first slab. Sarji, capacity utilization is 0% up to 50%. How much will be the semi-variable overhead you are going to incur, Sarji? Is it 5,60,000? Your capacity utilization increases more than 50%, Sarji. If it is more than 50%, goes up to 75% or part thereof also told us, sir. So 50, 51, 52, 53, 55, 60, 70, 75 or part thereof. So between 50, more than 50 up to 75%, how much will be the semi-variable overhead? How much will be the semi-variable overhead? 5,60,000 or 7,10,000? Why 7,10,000? increase by 1,50,000. So already you'll have to pay 5,60,000 plus 1,50,000. Correct na? 7,10,000. Next third slab will be more than 75%, goes up to 100%. Sir, again it will, or part thereof, again it will increase by 1,60,000. So what will be new 1,50,000? It will increase. So is it 8,60,000, Prabhu? Correct, guys? Or part thereof is very important. So this is your slab rate. Let's read the next part. JK Limited work at 60% of the capacity. ठीक है. Company work at 60% of the capacity for the first 3 months. Okay. First 3 months, 60% capacity utilize. Then it is expected to work 90% of the capacity for the remaining 9 months. First 3 months 60%, remaining 9 months 90% capacity is utilized. Next, sir, the selling price per unit is 44 during the year. Correct or wrong? 44 rupees is the selling price for entire year. Read question carefully, sir. I am asking some question. 44 rupees is for entire year, or it is for 3 months, or it is for 9 months, or for year? What it is, sir? Sir, for first 3 months, you have sold the material, final product at 44 rupees per unit. Next, sir, you are required, what will be the selling price per unit? Should be fixed. Sir, what you need to calculate? Selling price per unit. Read carefully. You want to calculate selling price for entire year, selling price for 3 months, or you need to calculate selling price for 9 months? Why not year? Because already first 3 months selling price is 44. Remaining 9 months you will have to calculate selling price. Correct, sir? But profit figure is given. Read that important line. Profit is 15,62,500. Array, sir, 15,62,500 is profit for 3 months, 9 months, or for entire year? Read it carefully. Entire year. Okay. Sir, material cost, labor cost, variable overhead, fixed overhead will be very simple. Just concentrate on the semi-variable cost. Okay. So which column I will prepare, sir? Please concentrate. Which column I will have to prepare, guys? Particulars will be the first column. Next, you have given data for 3 months, different data, 60% capacity utilized. 9 month ka data is different, 90% capacity utilize, and total data we need. So we'll prepare 3 columns. First 3 months, then 9 months, and then we'll have to take total for year. Correct? Sir, which selling price we'll have to calculate? Sir, quickly tell me, which selling price we'll have to calculate, sir? Sir, the 3 month ka selling price is already given 44 rupees. We'll have to calculate selling price of the 9 month. Correct, guys? Please concentrate, guys. Here, I have taken one test. So many students, previous batch, sir, so many students did the mistake here. So many students did the mistake here. Sir, how much is your full capacity in a year? Read first line. Full capacity in a year. Is it 5,20,000? So what will be the full capacity of the 3 month? 5,20,000 into 3 by 12. Karo calculate. 5,20,000 multiplied by 3 divided by 12. Is it 1,30,000, guys? Full capacity I am talking about. I am talking about full capacity, that is 1,30,000. Then 5,20,000 divided by 12 multiplied by 9 month. Sir, your 9 month ka capacity, is it 3,90,000, sir? How much capacity is actually utilized by you? In first 6 months, 3 months, I think so, 60%. So 1,30,000 multiplied by 60%. Sir, how much capacity actually utilized? How much is your actual production? Is it 78,000? Next, in a 9 month, 3,90,000 is your capacity total multiplied by 90% utilized by you. Is it 3,51,000 produced by you? So 78,000 plus 3,51,000, 4,29,000 is your total annual production. 3 months, 6 months, 3 months, 9 months, and annual. Next one. Read question. How much is the material cost given in the first part? Is it 15 rupees per unit? So what we will do? Direct multiply, Sadi. 15 multiplied by 78,000. Your answer comes to, is it 11,70,000? Then 15 multiplied by actual production is 3,51,000. Your answer comes to 5265. If you multiplied by 4,29,000, your answer comes to 64,35,000 material cost. Boss, read carefully labor cost. Read carefully labor cost. Sir, what is the labor ka rate given in the question? 9 rupees per unit. But subject to minimum 2,50,000 per month. Correct hai? So superb adjustment, sir ji. If I take per unit 9 in first 3 months, 9 multiplied by actual production is 78,000. My answer comes to 7,02,000, sir. But problem is there. You have given assurance to the worker. What assurance you have given to the worker? Better to dar mat. Dar mat. Will have to pay 2,50,000 per month minimum. So for first 3 months, 2,50,000 plus 2,50,000 plus 2,50,000. Is it 7,50,000? Sir, unit wise, how much comes, sir? 7,02,000 you told me, sir, unit wise. 9 rupees multiplied by 78,000. It comes 7,02,000. But, sir, you have given assurance, boss, we will pay minimum 2,50,000 per month. So, sir, 7,02,000 or 7,50,000, whichever is higher, you will have to pay. Is it 7,50,000? Next 9 months, let's calculate, sir. 9 rupees per unit multiplied by 3,51,000. Sir, it comes to 31,59,000. Correct? But wait. 31,51,000, 59,000. Wait. Why to wait? Per month assurance is given. How much assurance given per month? Is it 2,50,000? For 9 months, it will be 22,50,000. So 22,50,000 is more, or 31,59,000 is more, whichever is higher. Have you got the adjustment of the labor? So material ho gaya, labor completed. Then, sir ji, fixed overhead. Prime cost will get. Then variable factory overhead. Sir, how much is the variable factory overhead? Is it 8 rupees per unit? Simple hai. 78,000 is the production multiplied by 8 rupees. 3,51,000 is the production multiplied by 8. You got the variable overhead. Fixed overhead per annum they have given 9,60,000 per annum. So in total column I will write there 9,60,000. 3 months you can easily calculate, sir ji. 9,60,000 divided by 12 multiplied by 3. Your answer comes to 2,40,000. 9,60,000 divided by 12 multiplied by 9 months. Is it 7,20,000 will be your fixed overhead? Correct hai? Sir, boss, most important adjustment of semi-variable overhead. Please calculate semi-variable overhead for the 3 months. First 3 months, how much capacity is utilized by you? Prabhu, how much capacity is utilized for the first 3 months? Is it 60%? Which slab is applicable to you? First slab is up to 50%. Second slab is more than 50, up to 75%. Third slab is more than 75, up to 100%. Sir, for first 3 months, which slab is applicable? Is it second slab? Means 5,60,000 minimum you will have to incur, plus 1,50,000 you will have to incur. Is it 7,10,000? But sir ji, don't make mistake in examination. 7,10,000 is annual cost. We want, sir ji, 3 month ka cost. So 7,10,000 multiplied by 3 divided by 12. Sir, how much is your answer? Please check there, sir ji. Is it 177,500? Boss, clear hai ye point? Next point, guys, in the 9 month. Next 9 month, please check, sir ji. In a next 9 month, how much is capacity utilized, sir? Is it 90%? In which slab you are going to work, sir ji? Is it in third slab now? Third slab now. So third slab is 8,60,000. Calculate, Prabhu. 8,60,000 divided by 12 multiplied by 9 months. Your answer comes to 6,45,000. Your answer comes 6,45,000. So we have written total also. Correct, guys? Then you get the total cost. Perfect, sir. Now, what we have to calculate? Concentrate here now. Sir ji, concentrate here now. Yes, sir. Suppose we calculated total cost, right? What is the question, guys? What we need to calculate? Selling price we need to calculate, correct? But selling price of what? 9 month ka required, sir ji. Profit is given. That profit is for 9 month or profit is per annum. So what I'll do, I know the selling price of first 3 months. How much is the selling price of first 3 months? Is it 44 rupees? So I'll write there 44 multiplied by quantity 78,000. 44 multiplied by 78,000. Sir, how much it comes? Is it 34 lakh 32,000? Sir, I've got the selling price per unit. I've got the total sales. I got the total cost also. Sir, how much profit I have earned in that first 3 months? Is it 4 lakh 70,500? In the question already they have given total profit for the year. Sir, how much is your total profit, sir? 15 lakh 62,500. In which column I will write that 15 lakh 62,500? Overall profit. Is it annual profit will write, sir, in total column? Sir, I know the total profit for annum. I know the total profit for the 3 month. Sir, the remaining will be the profit for the 9 month. Is it 10 lakh 92,000? Now I know the cost. I know the profit of the next 9 month. Then I'll get the selling price of the 9 month. Gross selling price of the 9 month come 1 crore 36 lakh 89,000 divided by sales quantity 3 lakh 51,000. So yes, 3 lakh 51,000 is your sales quantity. What will be my selling price of next 9 month? Is it 39 rupees? Yes or no? So Sarji, first of all, you have completed first paragraph, first column. Selling price of the first 3 months was given 44 rupees. You return total sales. Sarji, cost minus total sales will be, balancing figure will be your profit. Then you return total profit 1562,500. You know the profit of the first 3 months. Remaining profit you will have to revise, recovered from 9 months. So cost plus profit is equal to total sales divided by sales quantity. You will get the selling price of 39. Sarji, don't make mistake in exam. Don't calculate selling price per annum. Why? Don't divide that total sales divided by that total sales quantity. No, sir. Because 3 month ka selling price is different. 9 month ka selling price is different. Common selling price is not applicable. You have one more question in your notes. Correct, guys? Same to same. Next question in your notes. Same to same, sir. You have one more question in your notes. Correct, sir ji? Was in that question, 3 different column are given. First 6 month are given. Then 9 month are given. So, sorry. 6 month, 3 month, 3 month given. Correct? So here, which column you will prepare? 6 month, 3 month, again 3 month and per annum. In that question, separate selling price of 6 month, 3 month, 3 month is not asked. Which selling price asked? Selling price per annum asked. Correct, guys? So in that situation, sir G, don't write anything here. Don't write in first 6 month column. Don't write in next 3 month, 3 month. Directly write in total column. Yes or no? Take total cost. Yes, sir G. Total cost will be required. Take total to the total column. Add profit, whatever given, and you will get the sales value. Then divide and you will get only one selling price. You will get only one selling price. Correct, guys? Sirji, in that question, slabs are really important. Sirji, in that question, slabs are really important. For that semi-variable overhead. Which are that slab? We'll discuss that and we'll stop our lecture. Yes, Aji. Read that semi-variable ka part. Read this part. Semi-variable cost 5 lakh rupees per annum up to 60% capacity. 50,000 for every 5% increase in capacity or part thereof up to 80% of the capacity. And thereafter 75,000 for every 10% increase in capacity or part thereof. Sir, please tell me slab. Prabhu, please tell me slab. Sister, please tell me slab. Brothers, please tell me slab. First slab. Sirji, 0% up to 60%. Sirji, my answer comes to 5 lakhs. Correct, sir? बरोबर. Next, you tell me, I'll write, sir. More than 60%, then up to 80%? Wrong, sir. 65%, my cost will be, is it 5,50,000? More than 65%, up to 70%, is it 6 lakhs? More than 70%, up to 75%, 6,50,000. More than 75%, up to 80%, sir, is it 7 lakhs? Sir, after 80% slab change. After 80% slab change. So the next slab will be more than 80%. More than 80% up to, is it 90%? Correct, sir? What will be your answer, guys? Is it 7,75,000? And Sarji, more than 90%, up to 100%. Sarji, your answer comes to 8,50,000. Correct, sir? Now check how much capacity you have utilized in first 6 months. Read, Sarji, this paragraph, last paragraph, read, Sarji. How much capacity they have utilized in the first 6 months, guys? Is it 50%? Acha, okay, 50%. Which slab is applicable in first 6 months? First slab is applicable, correct? How much will be the semi-variable cost for the first 6 months, guys? Is it, be careful, sir, 5 lakh is per annum, correct, guys? 5 lakh multiplied by 6 divided by 12, is it 2,50,000? Next 3 months, sir, next 3 months, read, Prabhu, sister, please read. Next 3 months, how much capacity is utilized, sir? 75%. Boss, 75. Huh, 75%. Which slab, sir? Is it 6,50,000 wala slab? Are yes or no? Now, what will be your answer, sir? 6,50,000 multiplied by, is it 3 divided by 12? 3 month ka data hai, sir. So, 6,50,000 divided by 12 multiplied by 3. Whether your answer comes to 160 to 500? Last, Sirji, last 3 months, check how much capacity is utilized, Sirji. Last 3 months. Kidhar hai? Full capacity, sir. Full capacity means 100%. Last slab is applicable, guys. Is it 8,50,000 multiplied by again 3 months divided by 12 months? So 8,50,000 divided by 12 multiplied by 3. Your answer comes to, is it 2 lakhs? 12,500 is your answer. Remaining question will be same. Material cost, labor cost, variable overhead, fixed overhead, semi-variable overhead. We have written total cost. Take a total cost directly to the total column. Then ignore 6 month, 3 month, 3 month column. Add profit. Boss, how much is to be profit earned here? They have given, sir. Kidare. How much is the profit they want to earn, sir? Where it is? Where it is? Kidar. First line. Company desire to earn profit of directly. No, you were telling 25%. I am really confused. Where is 25%? Acha, 25 lakhs you were telling. Yes. So directly total cost plus 25 lakhs will be your total sales. Total sales divided by total quantity will be your selling price per unit. Correct, guys? But institute will not give you very easy marks. Institute will not do that. Sir, read question carefully. Some student will do mistake in first line itself. So directly paper checker job will be easy. He will not check next part. Direct first line is wrong. What is 4,20,000? Sir, 4,20,000 is not your 100% capacity. Read carefully. Some student, if this question come, so they will be very happy. Arey wow, this question come, we already solved this question. Like a previous question, 5,20,000 is a 100% capacity. Directly 5,20,000, 6 by 12 or 3 by 12, 9 by 12, whatever. But sir, please remember, 4,20,000 is not 100% capacity. It is your 70% capacity. So your 100% capacity is 6 lakhs. So your 6-month capacity will be 3 lakhs. 3-month full capacity will be 1,50,000. Again, 3-month full capacity will be 1,50,000. Sir, you know everything. Don't make this mistake in examination. Direct Sirji, he will be very happy if you do this mistake. 4,20,000, 100%. 6-month ka capacity 2,10,000. Okay. So he will be really happy because he will not check next line directly. Because first line is wrong. Material cost, labor cost, except fixed cost, everything will be wrong. They will give you half marks for that. Only fixed cost will be correct. Because fixed cost will not depend on production. Or semi-variable cost will also be correct, sir. The semi-variable cost. So more half marks. So 1 out of 10 you will get if you make this mistake. So guys, here we have completed 2 very simple topic, but yes, frequently asked topic. Either batch costing or job costing, practical question generally asked in examination. So thank you so much guys. See you in the next lecture.